Hey everyone, welcome back to Corporate Decoder. Today VRRM just filed a current report announcing a major contract termination, and I'm seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. Verra Mobility is facing a significant blow with a key customer ending their contract, and this could have a ripple effect. So Verra Mobility, or VRM as you see it traded, has put out an official report. This kind of report, an 8K, is for big news that investors really need to know about quickly. The big news is from May 26, 2026. This filing is all about Verra Mobility Corporation. Their stock trades on the Nasdaq capital market under the ticker VRM. The main reason for this filing is something called Regulation FD disclosure. Basically, companies have to make sure important information is shared with everyone at the same time, not just a select few. And what they announced is huge. They received a termination notice from Avis Budget Group. Avis Budget is ending their contract with Verra Mobility. This is a really significant event for Verra Mobility, as they explain further in this section. Again, the core news is this termination notice from Avis Budget. Now, why is this such a big deal? Avis Budget is not just any customer. They are a significant one, representing over 10% of Verra Mobility's total revenue. That means for both the first few months of 2026 and the entire year of 2025, Avis Budget accounted for more than 1 out of every $10 Verra Mobility made. Losing a customer that brings in that much business is a serious blow. Think about it, if you lost a fifth of your income overnight, that would be massive. And for Verra Mobility, it is more than a tenth. To give you a sense of how impactful this can be, recall when another company, Clorox, faced operational disruption. Their stock reacted significantly, and while that wasn't a contract termination, it shows how unexpected business events can shake investor confidence. Losing 10% of your revenue is a major event that investors will be watching closely for its impact on future earnings. Because of this major customer loss, Verra Mobility has also had to revise their financial forecast for the rest of 2026. This usually means they expect to make less money than they previously thought. When a company revises its guidance downwards, especially after losing a big client, it is a signal that they are bracing for tougher times ahead. The full details of this announcement are in a press release, which is part of this filing. This press release likely goes into more detail about the contract, why it was terminated, and what the company plans to do next. The fact that a customer representing over 10% of revenue is leaving is a huge concern. It raises questions about the company's ability to retain its major clients and the overall health of its business relationships. This isn't just a minor hiccup, it is a major event that could affect the company's financial performance for some time. Now, looking at the company itself, Verra Mobility is in the technology and information technology services sector. They have a market capitalization of about $685 million and a price-to-earnings ratio of 5.5, which historically might suggest it is undervalued, but that number needs to be considered in light of recent events. They have around 1888 employees. We've seen other companies face significant contract losses. For instance, the struggle of companies like Bed Bath & Beyond or Rite Aid after major setbacks illustrate how losing key business can cascade into larger operational challenges. While Verra Mobility isn't in that dire a situation yet, losing a customer that's significant is a step in the wrong direction. The current news headlines also paint a clear picture. Headlines like Verra Mobility stock plunges on Avis contract loss, lower 2026 outlook, and why Verra Mobility VRRM shares are sliding today directly reflect the market's reaction to this news. Investors are clearly concerned, and the stock price has already taken a hit. It is also interesting to see that despite the negative news, there is also a headline suggesting potential for a rebound in 2026. This suggests that while the current situation is bad, some analysts might see a path forward for the company. Also, Swedbank selling a large portion of their shares right after this news is a strong signal that institutional investors are reacting negatively. We also see that major institutions like BlackRock and Vanguard have significant holdings in Verra Mobility. When such large players hold substantial stakes, their reaction to major news like this can influence the stock price significantly. Their increased scrutiny after such an event is to be expected. What I am actually looking for now is how Verra Mobility will fill this revenue gap, and whether they have strategies in place to mitigate the impact. The revised guidance will be key, but more importantly, how quickly they can secure new business will determine their future performance. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. And if you like this analysis, give it a thumbs up, subscribe for more, and join our Discord community linked below.